This is Alan Bush with ADMIS. In the stock index futures, we are seeing some pressure developing today. We did have some weaker than anticipated corporate earnings, especially in the retail sector, but also we had quite a variety of economic reports, most of which came in on the weak side. Capacity utilization coming in weaker than expected. However, we did have jobless claims coming in at a very low number at 297,000. So mixed numbers, but mostly weaker economic numbers, putting some pressure on stock indices currently. However, I think we will see some recovery later today, even though there is pressure this morning. Still thinking the long-term trend is higher, as it appears that several central banks around the world are likely to add more accommodation to their banking system. Over in the currencies, seeing some pressure in the euro. This after Eurozone GDP coming in weaker than expected, up 0.2%. The guess was up 0.4%. So this bolsters the argument for the need for the European Central Bank to lower interest rates at their June meeting. However, we are seeing the pound holding up relatively well. Yesterday we saw the pound being dragged down by weakness in the euro. Today the pound is actually a little bit better. So I would expect the pound to continue to perform better than the euro. So the pound should gain on the euro, and I think that's a trend that is likely to continue for quite some time. Also the yen a little bit lower, even though we did have the GDP in Japan coming in stronger than expected, although this was probably due to an increase in productivity to meet the needs of Japanese consumers who were willing to buy goods and services in advance of the April 1st value-added tax. I'm anticipating that Japan's economy for the rest of the year will be subpar, to say the least. So from here, look for lower prices in the Japanese yen. Interest rate markets now trading sharply higher. We do have the 30-year bond now at an 11-month high. Good gains today. Nothing changing in our long-term view on treasuries. Looking for more of the same, higher prices across the board. Most of the strength likely to be at the long end of the curve in the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.